Yep. Welcome everyone. Happy Sunday. So excited about tomorrow's market opening back at lows and giving us opportunities to buy these dips. First time in last almost 7 to 8 months, market after being bullish, going bearish right now. And we saw in our Discord chat, we read some journals. I shared the links over there. And experience financially sharing like market is going down by 10% by the elections. We are already seeing the moves downwards. Uh, Maybe I thought a class now would help more on trading, creating a system among yourself to consider trading as a serious thing, but not a just a part time or a fun thing to do with because you are dealing with the money here, hard earned money. I don't want you people to lose all money when you are into this by believing me. So in this class, I'll make you understand why you need to consider trading as a system. But before that, I'll give you some tips to grow a small account. And mostly we'll be discussing about five-step approach. What is the five-step approach I followed in my initial stages of trading? That is like around 2020. Like it's been 4 years now. I'm into trading and I was able to convert my four figure into five and five to six. And sometimes it may take time for new individuals in trading to convert a three figure into four. So I usually suggest people to start with 2 or 3,000 or 4,000, how much you are comfortable with, but at least 2K, so that you can actually position trade yourself pretty well and be comfortable in any kind of markets. And try to convert the 2 or 3, 4K into 10K, then aim to convert the 10K into 25K. And the next target would be to reach 100K with using 25K. Then you move on to 150K. So that's how usually improve your trading goals and increase your money and get capital from profits and analyze yourself and be good at this. But though you all follow my Discord, I signal every trade on my Discord which I get in, every swing, every high risk play, even crypto swings and long term positions and lips. But do you think everyone in this chat is as equally profitable as I am? The answer is definitely no, because what happens here is my execution, my trade plan is different compared to yours. The only thing which is similar in between us is the position which we are entering into. Sometimes there was small account chat which recently converted into 2K to 10K challenge, right? So most of the time you might have been observing when I signal a trade, when I signal a swing, most of the people come up with a question, right? Like it's already up like $30 or $40. Do we really need to enter into it? But eventually, after 10 or 15 minutes, it actually appears at the lower price than which I'm entering into with, right? So considering day trades, it will be even more difficult because in day trades the candle size is just 5 minutes, but in the swings it's 1 day. That means an action of red or green will be considered for whole 1 day in a swing. So you can be red for 3 or 4 days or even 2, 3 weeks, and you can be green on a single day. In the same way, in day trading, you can be red for 10, 15 minutes, and the next minute you get green and you take profits. So it's different for everyone, though you're following the same positions and same expiry date and same number of contracts. So it all depends on your own strategy too. But initially, to be technically more strong, it's difficult for any individual who is starting trading with. So I will show you, make you understand what is the five-step approach I followed and which I am expecting you all to follow. And also, I'll tell you how to journal your trades, how to manage your size, approach account, and positions. I'll see if I can cover trading plans which can be high win rate system, or else I'll take another session only for that because that is very much important considering market giving us many opportunities to get into now, right? So the first thing is five-step approach. In five-step approach, first thing you need to do is you need to study other profitable traders. Consider me. So myself, I feel myself I'm a just a trader. For you people, I'm a profitable trader and a more experienced trader than you. But there is always a big whale in the ocean. So I know many people who trade like 6 figure, 7 figure, and they're very much more profitable than me. So I look up to them. You can look up to me. So if you consider any two or three profitable traders, one can be very aggressive and one can be very secure. If you see my Discord chat, I'm always secure. Like I follow patience. I wait for the market to come to my levels, and mostly we do level trading, right? We don't get greedy. We won't increase our anxiety. We control our anxiety. We follow our levels. We stick to our levels. We want the stock or the market to reach our levels before we throw our money into it. But for other traders, it's different. They enter into any kind of trades daily and they want to earn at least 300 to 400 or whatever their profit size is daily, and they're a bit aggressive. So you need to choose what kind of profitable trader sets up to your mentality. You can be any kind of profitable trader. You can look up to any profitable trader who is aggressive or secure or more technical or a level size trader or is just going with his emotions. Anyone can be profitable on their own strategy. So you need to study at least 4 or 5 profitable traders from your own market, and you need to follow maybe a one or two profitable traders who sets according to your mentality, right? And the second thing is find a system that resonates with you. System that resonates with you. What do I mean here? That means you should have a system of your trading, right? So what kind of trading do you want to do? Do you want to follow the supports and resistance? Do you want to follow the bull market and go with it? Do you want to follow the bear market and go with it? Or do you only trade with earnings? Or do you only trade with patience only equities? When I say equities, that means you're buying only stocks. Like for example, if there is earnings happening for Meta and Meta goes down by 40 or $50. So yesterday Meta priced at 500 consider. Today it's at 450. So you learn what has been announced in the earnings, and you see Meta is going to be profitable in 5 or 10 years. So that is the system you're trying to adapt. That means you are only going through the earnings, you are looking for the dips, and this process is the system which have been selected by you to get into the stocks, and you buy Meta stocks. Right? Coming to us in our Discord, we follow levels, right? We always look for dips. We see a profitable company which is going down due to some selling off or being an oversold RSI or relative strength index. I mean, RSI is relative strength index, right? So, which is going closer to 200 MA, and look for some stocks which are profitable in their revenue, which have good business in upcoming years or months or quarters. But if we get for the low size, we mark our levels, and between two levels, we buy the dip and we sell the dip and we make money. That is a system which we are following. So you can find own system which resonates with you. You can adapt to anything. Like you can just study the market and consider if retail industry is going up. For example, now semiconductor industry is going up. You can buy a bunch of semiconductor stocks and trust and rely on them. That is your system which you are going to adapt. Right? Number three, you trade with the system and you build data. That means when you choose a system, you can't blindly go into it, right? You can't get into it blindly like I like earnings. It gives me more anxiety. I get more money there. So I'll just trade the earnings. I'll see which stocks falls down. I'll buy it. I'll make money. It's not like that. Once you have choose your system, example myself, if I choose a system to buy the levels, right? I'm looking for the stocks with profitable stocks with dips. So now what I do is I at least write down like 10 to 15, maybe 20, 30 stocks, which are good profitable, but which are getting a less of 5 to 10% than the actual price there has to be according to the market conditions and revenue and everything. So you need to create a data for yourself in the particular system which you are choosing or going to adapt with. Then analyze yourself and look which can be more profitable in that and get into it. Right? And refine your system, workout. So what do I mean by workout here? That means you can't stick to a system and consider that is true or that is right. There are millions of systems to adapt in the trading market, and many people trade on their own system. Some people only trade once a week, that is at Friday 2 p.m. to 3:30. That's it. They trade 1.5 hours a week, but they will be profitable with 6 figure or 7 figure. That is their system, right? Because what system works for you individually is very much dependent on you. So whatever system you're choosing, try to analyze. You need to work on it. If you're following a system of only swinging, like me, I'm mostly into swinging the contracts for more 6 or 7 weeks. I follow bullish divergence, oversold RSI, three touch resistance, and bounce from the last 52-week lows and everything. And in this is my system, and mostly I'm successful up to 87 to 88%, right? How can I say it's 87 to 88? If you ask me bullish divergence, I am 92. And if you ask me oversold RSI, I am 95. If you ask me third touch resistance, I'm 83. So I'm saying you all these numbers 92, 95, 83 on RSI, bullish divergence, third touch resistance because I am actually having the data. I'm working on it. If I get into a call, if I get into a put, I actually write my entry, actually write my exit, and why was the reason I'm in it, and what was the graph. I'll have screenshot saved it. When I entry, what was the screenshot? When I come out, what was the screenshot? So I have used a system, and I will know it's a success or a failure with win percentage or a lost money percentage. So when I compare last 100 of my bullish divergence, 92 were profitable. So I can say 92 because I have the data. It's not like I just open the mobile or iPad or anything, open Robinhood or TradingView, just enter, take money, just enter, take money. It's not like that, right? You need to build your data. You need to work on it. What's going wrong, what's going right, and everything, right? And the last one is size up. So what do you mean by size up? People really don't know what risk management is. Most of you will lack risk management, and it will be a big blunder to start trading without knowing what risk management is, right? I have taught you risk management in many, 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 many situations, but I would like to teach you every day because even a good profitable trader like me can make mistakes by not following risk, right? Don't always put all your money in single bucket. If you have 20,000, trade with 2,000. Even though if you lose 2,000, you still have 18,000 to make 2,000 and even more, right? You can't put all your money in the single bucket. So that shouldn't happen. Size up here means if you're starting trading with 5,000 and your single trade size is 500, that means you're not putting 500, more than 500 in any single trade, right? You start with 2,000 or 3,000, you're putting 500 in Netflix, 500 in Meta, 500 in Nike, right? This is your size. So after being profitable, your 2,000 will move to 3,000, 3,000 to 4,000. Now consider you have moved 2,000 to 5,000. Now, until you move 2,000 to 5,000, your initial sizing was 500 per trade. Now you need to size up because you are profitable almost like 150%. So your size up will be from 500 to 700, right? Now, as you have moved your $2,000 to $5,000, you're going for a size up. That means a single trade, you used to only use 500 when you are converting 2,000 to 5,000. Now your target is to convert 5,000 to 8,000 or 10,000 maybe. But from now you are sized up. That means you're sizing up to 700 from 500. And now you are allowed to use 700 for each single trade. That means now you can use 700 on Netflix, 700 on Meta, 700 on Nike, and so on, right? So these are the 5 things which I have analyzed, which was the difference for me from last 4 years. So this is not something which I have written and I've done it, but these are the something which I have done and I've written for you guys to understand how you can actually build a small account, right? It's very frustrating sometimes to lose money, but you should always feel that money is not the thing in trading, right? You need to learn something. It costs you money, right? So money will be lost sometimes and you win sometimes and you lose sometimes. But it's all about maintaining that system, building the data, and how other profitable traders are, and how you refine your system, and how you actually size up and size down, right? These are the 5-step approach. And next thing is how do you journal your trades, right? So Actually, there are many people who actually put their entry and exit in some softwares like Tradezilla. You can go get into it. Like once you enter into it, you'll be very. It's like easy thing to understand what's going on there and how to use the software. But for me, a pen and paper should be totally fine to use as well because I would say you can create an Excel sheet or you can have an Excel tab open always all the time, and you can create some columns, and rows will have whatever entries they have been, and column names can be something like you can include a serial number, and you can do sticker. Ticker means the whatever stock you're entering into. I mean, if I say Facebook, the ticker is META, Meta. If I say Microsoft, the ticker is MSFT, right? So you need to column one name as sticker. You can use sticker names in that. Next, entry. At what level you took the entry. Next, exit. At what level you took the exit. Reason. Why did you enter into that trade? And was it a call or a put? And what calls were it? And what is the expiry date? When did you come out? And how much profit or loss did you make? So this is your personal. So no one should see this, right? So you're entering into Meta. So you write it Meta. You entry level is 435. Exit was at 440 plus. I am saying 440 plus because you may have trimmed your contracts at 440 and took all contracts out at 442. So always exit should be 440 plus, 441 plus, that kind of return, right? How much profit did you make? Maybe $1,000. How much loss did you make? Zero. What was the reasoning? Bullish development. So this is the way you always journal your trades. So what happens is if you consider, if you have done like in a quarter, if you have done like 70 trades and you have everything in Excel, right? Now you analyze yourself, how many of the entries and exit were in tech industry? Out of the 70, suppose 15 to 20 were in tech industry, right? And 30 to 50 were in retail, and 10 to 15 were in health, and remaining were in semiconductor, right? Now you will come to know in that quarter, did tech really did good in your system, right? You adopted a system and you're journaling your trades because everything written in an Excel sheet and you have simplified it and you have written everything in it. You know how much industry, how much money you made from each industry, and you'll analyze yourself. Is your system working in tech a good thing? Is your system working in semiconductor? Is also a good thing. And if your system is working in every industry, that's really a good thing. But if your system is trying to fail, or if your system is trying to make you lose some money in any particular industry, like suppose if you're unable to earn from Meta, Facebook, Apple using bullish divergence, but using the same strategy, if you're able to earn from Kroger, Walmart, and Duke Energy, Exxon, Zoom. So that means in tech industry, your system that is bullish divergence is not really working. So at the end of the quarter, you will analyze yourself, you will try to create a new system, and you will stay out of tech, not completely, but most of the time. Now here what happens is, again, if your tech is unable to gain more money in your system, for example, we are considering bullish divergence system here. It cannot be only one bullish divergence throughout the quarter, but it can be anything, right? Your own system, levels or day trading or bull market trading, bearish market trading, anything, right? So you analyze in which techs, like if Meta was profitable using bullish divergence, if Microsoft was profitable using bullish divergence, if Apple failed. So why Apple failed? That is what you need to understand at the end of the quarter, right? Not only Apple, I'm just considering you the example. So you need to journal your trades every quarter or every month or every week. So being a small account trader, you can just take only 3 or 5 trades a week, right? So it's mostly monthly 15 to 20 trades, and end of the quarter it can be 60 to 70 trades. Right? So you need at least 50 to 60 trades to journal yourself and understand what's wrong or what's right with the system. If you feel your system is doing good and you're profitable that quarter, what do you need to do? You need to size up. Right? You need to size up. You need to analyze your system, look for new systems, study more profitable traders, study the market, analyze yourself, consider the conditions adapting to you and adapt to your own system, and you go ahead. So journaling is always important. If I ask you, if I ask you, After joining my Discord, do you have any set of trades which actually have the entry level, exit level, profit or loss made by you? How many contracts were you in? On which date you were in? On which date you were out? What's the expiry date? Why did you get in? Why did you get out? How many of you can have the notes of it? None, right? But if you ask me, I have every trade journal from day one, at least from day 50 or 60, because it took me a month or two to understand things like this and learn everything. So that is what you need to adopt. You should always have Excel sheet where you can generate your trades, and it's personal to you. You need not show anyone. That's the reason I'm not showing anyone like what's and where it is of mine. But I'm giving you every rational why it is breaking the levels, when it is going to the support, when it is going to the resistance. So you need to have a clear cycle. You need to have a clear picture of what is happening for your trades. So you need to generate them in your Excel sheet. That's the reason I said pen and paper is fine. If you want to write it down, it's still a mess, like you're writing and everything. So you can just keep an Excel sheet. That should do for you, right? That is about generating your trades. And after this, things what you need to do in position sizing and managing risk is, firstly, you need to define the short-term and long-term goals of the trade, right? So if you're getting into a position, consider we are in pins position now, right? So first, when entering into the pins position, my short-term goal was to add to pins when it dips to 30.57, right? I mentioned that we are adding to pins when it dips to 30.57. Luckily, it went there, we added up, that was the short-term goal, right? What is a long-term goal? We are in 33 calls. Now I'm expecting it to at least reach 31, 32, right? I will trim few contracts there and hold few runners to get more profits, right? So you should know why you are entering, what is your short-term goal, what is your long-term goal, right? You can't blindly enter into it, or you can't just take it and sit at it or watch at it. When it gives me some money, I'll come out of it, right? That's the reason many people, when you talk with your friends, many people say, I was in Nvidia when it was at 150. I sold it at 250. Now it's 1020. Because he actually don't know why he's in Nvidia. He actually don't know why he came out of Nvidia. No, that really doesn't make sense if he cries that it's really 1,000 now, right? If you could have journal your stocks, if you could have actually followed a system, if you could have already adapted a system or tried to get into a stock or an option with a reasoning or a rational, and you actually know where the entries and exit is, you will never feel greedy, or you'll never feel anxious when it's down, or you won't feel greedy when it's already in profits, or you don't let it go into red after green, right? If you know why you're buying and selling, everything will be disappeared, and the only thing you can see is money, right? Coming, sizing up, money coming, sizing up, and you get profit. You just need to understand why you are in it, how much you can get into it, how much you're ready to lose, when you should come out, when you should trim, when you should take full profits, right? And second thing, create a daily routine. You might be asking, like, why do I need to create a daily routine to manage risk, right? So market opens at 9:30. Most of us come to Robinhood exactly at 9:30 and see what's going on with our stocks. Consider if you have two or three options open in your account, and you open your account Robinhood at 9:30, you see $200 down. Now, the mentality, human psychology says you sell it, sell it, sell it, sell it, reduce the loss, you should sell it. You'll sell it. But the thing is, you actually don't know why it is showing $200 minus, right? If you come to the market, if you open your Robinhood trading at 8 a.m., analyze what's happening. I'm in NVIDIA puts. So let me open NVIDIA graph. Why is it going down? Is it something the support broke? Or is it something the resistance pump or a bounce or a reject? Or is it something news which is causing this move? You will understand, and you'll try to get to know it by 9 a.m. So from 9 a.m. to 9:15 is something which you need to cool your mind. And at 9:20, you should open all your screens up and be ready for 9:30 for the market to be open. And now at 9:30, you really understood what's actually going with your NVIDIA pulls, right? So this is the kind of routine you need to add. It's not only 8 a.m. I actually mentioned you that people who only trade at 2 p.m. on the Fridays for 1.5 hour, right? For people who trade at the particular timings on particular days, I mean, like if you're working Monday to Thursday, you can trade on Friday, right? So if you want to trade at 10 a.m. on Friday, you need to be ready from 9 a.m. and you look at 9:30, then come by 9:50 and look for your time 10 a.m. Right? So usually 10 a.m. and 2 p.m. are power hours because that is where day trading usually happens. In USA, most of the people will be day trading at 10 a.m. and mostly at 9:30 to 10:30 and 1 to 2 p.m. So the stocks usually move most of the time. In those timings, the movement can be high, especially on Mondays and Friday, right? And have a method to research and analyze stocks. So you should actually adopt a method to research and analyze stocks. So what method it can be, it's on you. So are you going to pick top 10 stocks in the US market, or are you considering a particular industry and taking a top 10 or 15 stocks from the industry? Or you're just going from your friend's suggestions or my suggestions or any profitable trader suggestions? It's on you. But how you analyze is always on you. The better analysis will always come from individual results itself, because you can analyze in anything. You can analyze through graphs, you can analyze through news, you can analyze through revenues or anything. So you should have a method. Like, at least if you're trying to buy a stock, you should be answerable to yourself why I am buying this. So I chose this because of this. So I've gone through this and I've seen the revenue of this. I've attended the earnings call of so and so stock, and I also learned something which this company is doing in the technical sector, which is being lacking by all the companies in the technical sector. So I want to say this stock is the most prominent stock in technical sector. That's the reason I'm in it. So this is the kind of answers you have to be answerable to yourself when something comes up, like when you question yourself if you have a method to research and analyze stocks, right? And sorry, right, fourth one, have a strategy that works in different market conditions. In some market conditions, some strategies won't work. I've written this, but usually I won't really be accepting with this because our strategies work in all market conditions, because the the most flex of our strategy is we actually wait for the dips and levels. So even if the market is falling, you observe, like, we'll come out of our swings at minus 50% and we wait for them to reach a level. So it's actually we are waiting for dips, and if the market falls, they are mostly in very less few trades or mostly not in any trade. So myself, I consider if nothing is lost on a given day, it's always a win. So you need to understand, if you are saving your capital, suppose if you have $1,000 to the morning 9:30 a.m. If you move it to 1,010 by 4 p.m., you are profitable. In the same way, if you have 1,000 at 9:30 a.m. and if your money is still 1,000 at 4 p.m., you're still profitable, right? Because not losing money is always a win situation. Winning is winning. Like if you earn money, that's a win and you're earning. But if you're not losing money, is also a win situation in trading. That is what you need to understand. Capital saved is already money won, right? And in every market conditions, our strategy should be working, and it will work if you follow me and have an effective stop loss strategy. So for day traders, stop loss, most of the people, it's not with levels, because considering the option volatility, options may move 50-60% up and down, though the levels has moved just a bit or like 5 cents or 6 cents, right? But in swings, sometimes levels are very far and you can be minus 70% too, and suddenly it may go plus 200%. We have been experiencing it from past 1 or 2 months in 2K to 10K channel. But for me, I usually keep it at minus 50%, though if I feel the levels are not broken, at least if I have 2 or 3 contracts, I hold one contract with minus 50% loss. But I don't want stocks to go to zero. So I usually come out at minus 70% on swings. But there are some stocks which are minus 50, minus 60, or even minus 75, and coming back and doing 100% as well. So it's all about the expiry date and option volatility and everything. But you can't let go. Two things to remember: you can't let go a green trade into red, right? And never an option should go to zero. So if an option goes to zero, you're making the money zero. You should actually cut it and try to save the capital. If you're buying 3 trades, 500 each, and each goes by minus 50, minus 50, minus 50, right? You should save 250, 250, 250, and you should still have 750 out of your 1500. You can't just stay dumb and look that 250 going to zero and making your 1500 as zero, right? And the last one, have a method to document trades to backtest your strategy. As I already said, you need to journal your trades. You should always have a document, right? And the document can be like personal, like however you want it to. You create a document, but try to have a document like however you want to write, however it is understandable to you, how you can journal it like monthly or daily basis, that is up to you. But you should always have a document and try to maintain the document and do backtesting always. Like you should see what's working in your strategy and what's not working in your strategy, right? And the next thing, position sizing. So position sizing, consider like 2K or 3K account, right? So average size should be always be 10%. If you have 3K, 10% is 300 per trade. So any position, consider if you are in 3 positions, NVIDIA puts, Meta calls, and Nike puts. So for each call or put, you should have only put 300. That's a 10% of your account, and not more than 1 or 3 day trades per day. I mean, can be a day trade or a swing, and you shouldn't be not more than 1 or 3, right, per day. And profit goal is just $100 per day. If you are doing 3 trades, considering 10% for each trade, you are using 900 and making $100. That is just 10%. After 3 months, 20 trading days, 70% win rate. I mean, in every 10, 7 wins, 3 losses, right? And stop loss can be obviously 10 or 20, 30% based on you or based on level. Your account will still be at 8 to 9,000, and this is based on considering the market conditions. If market gives you various buy opportunities, you can do from 3,000 to 10,000 even in a single month. It depends on the market, right? But usually these things, I really said it 3 months, but it can take up to 6 months based on the market condition. Any extreme market condition should not last more than 3 or 4 week candles. So 6 months should be good enough to convert something from 2 or 3K to 10K. I already said you 2K to 10K challenge, but that should be really done by December. Like I said, it's gonna take like 5 or 6 months, but it should be way more than 10K by December, right? So that's how you position trade yourself. And once you move your account from 3K to 8K or 9K, now at 8K, you need to size up. That means for each size, you are still going 10%. That means your 300 has increased to 800. So your 3K account moved to 800, 8,000K. So 8,000K, 10% of 8,000K is 800 per trade. So previously you used to trade with 3,000, that is 300 per each trade. Now you are trading with 8,000, so it's 800 per trade. So that's how you size up and position size yourself, right? For all this, you always require patience, which is very, 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 very important. And eventually you will get it too, right? And few advices from my side. Firstly, limit yourself to 1 or 3 trades, right? So don't get into more than 1 or 3 trades at a time, right? Anything beyond this on a single day also should be considered high risk one, or just do a lotto size. Lotto size means you're ready to lose everything, right? So if your actual size is $300, lotto size should be $100. So $300, when you put $300, you expect a returns of 50 or $100. So when 300 is converted into 400, you come out of it. At the same time, if 300 drops by 100 or $150, you come out of it. That's a stop loss. And if you are already spent 1,000 of your $3,000, and if you want to take another trade, it should be a lotto size. That means your lotto size should always be 30% of your actual size. Now your 30% of your actual size is 30% of 300. So it's just $100 or so. And you're ready to lose all your 100. That's your lotus size, right? And never compromise your position size by going too heavy. Always define your risk. So that doesn't mean if something is actually very sure. If someone says it will definitely go up, you shouldn't be compromising on your positions. It's 10% of your portfolio, 10% of 3,300 is 300. That's it. Unless you journal your trades at the end of the quarter or end of the month or end of 2 months and size up yourself, you're just following to this and sticking to your own strategy, right? Not that someone is putting 700 in some trade and you try to replicate them. Your position size is 10% and that's it. That can be only changed by you after you generate your trades at the end of the quarter, right? You're starting with 3,000 for this quarter. 10% of 3,000, 300 per trade, that's it, right? Someone asks you to take two contracts each at 150. You take two, that's it, done. You're not adding to it because 300 per each trade, right? And each trade means you're putting in each option call. Like, I mean, if you're in NVIDIA put, in Nike puts, Meta puts. So for NVIDIA, you can put 300, for Meta 300, Nike 300. That's a 300 per trade, right? And no compromise in that. And if you have any red days, you need to adjust your size. That means go 5% next day, right? But you need not hesitate to enter and stay away from stock market, right? If you consider if taking three trades on Monday, 300 per trade and getting red. So I mean 900 to 600. Next day, try to go with size of 200 per trade, right? You do not be hesitant to take a trade, but you can size down. And once you're green, you can go to back to your 300 per trade, right? And you should be confident in developing through winning and building a cushion in your account. When I say cushion, it should be like kind of comfortable for you when you look at your account, right? It's all about win. Like if you have 100 today, if you have 110 tomorrow, that's a win. If you have 100 today, if you want 1,000 tomorrow, and if you make it zero today itself, that's not a win, right? You should have a cushion experience. Like you should be confident. Like if someone asks you, how are you trading? I'm a profitable trader, right? That is what you need to be in confidence with. Like all matters is you should be profitable. It doesn't matter how much profitable you are. You can't actually buy any crypto with $500 and get 700K tomorrow, right? That's all trash. You can't actually do that. Try to go by position sizing. This will definitely help you. First 6 months is definitely tough, but once you get to 6 months, you'll actually move your 3 or 4K to 10K. That's pretty easy. You'll move 10 to 25 in an year, and 25 to 100 will be in an year. 3 years from now, and sizing up and building your portfolio, you should be easily five figure profitable trader in 3 or 4 years, and that is very much enough time, right? So whatever job you're doing, a 6 figure or 5 figure, you took almost 22 years to study and get this, but with trading, you can reach a 5 figure profitable value in just 3 or 4 years. It can't happen in 1 or 2 weeks, right? And once you have seen 3+ months or 90 days of profitability, you scale up 5 to 10% every 2 weeks. That means you can actually consider 6 months or 180 days here. So after each quarter, you journal your trades. After every 2 quarters, you can journal your profits and put some profits in your capital, right? You started with 3,000 and in 6 months, you're at 10,000, right? Bring some more money and put more 10,000 in. Now trade with 20,000 because you're already profitable, right? So that's how you scale. It's on you. Like if you want to add capital every 2 months, or if you want to size up every 2 months, or if you want to size up every week, that's on you. But you need to journal yourself and understand the things and do accordingly, right? So that's it for today's class. It's already 40 minutes, so this should be good for now. So you learned the 5-step approach. You have seen what position sizing is. I've given you some advices and 5-6 steps for risk management, right? So I'll see you all tomorrow when market opens on my Discord. And next week, I'll get you one more class on the same recording session. Thank you all. Good night.